Hello, hello, good afternoon, social media, Facebook, YouTube land, YouTube world. This is Jeremiah Conjure tuning in from Annuity Association, and I'm excited to bring another unbiased annuity review. Today we're going to be discussing the Power Index 5 and 7 fixed indexed annuity offered by AIG Life Insurance Company. So I'm sure you're familiar with AIG, one of the largest life insurance companies in the United States. And this is one of their many product offerings in their fixed indexed annuity lineup. And overall, it has been the #2 selling fixed indexed annuity as of Q3 of 2020 in the bank distribution I guess, avenue or market. Basically, it's the #2 selling overall indexed annuity, and the distribution channel, I guess that's the right way to say it, has been banks that offer this product. So excited to dive in and bring to you a unbiased annuity review. We're going to be uncovering the features, benefits, rates, and more of this product. And in addition, later on in this review, we're going to be taking a look at a hypothetical back-tested performance to see how this indexed annuity has performed over the last over the last 10 and 15-year periods. So without further ado, I'm going to go ahead and start with our disclaimer real quick, get the legal stuff out of the way, and then we'll dive into the product brochure and then move on in the review to our analysis to see how those back-tested performance figures look. So bear with me. I'm going to go ahead and share my screen and we'll get started. Okie dokie. Hopefully everybody can see this. If you're looking at watching this on Facebook or YouTube, you can click the bottom right-hand corner of your screen, and that will give you the full screen viewing option to make this larger so that you can see it. Okay, so let's go ahead and dive in. So again, talking about the AIG Power Index 5 and Power Index 7 fixed indexed annuity. This is a review, not a recommendation to buy or sell an annuity. AIG has not endorsed this review in any way, nor do we receive any compensation for this review. This review is meant to be an independent review at the request of website visitors so they can see our perspective when breaking down the positives and negatives of this particular annuity. Before purchasing any investment product, be sure to do your own due diligence and consult a properly licensed professional should you have specific questions as they relate to your individual circumstances. All names, marks, and materials used for this review are property of their respective owners and not that of annuityassociation.com. While care has been made to ensure this review is complete and accurate, no guarantees are made to the completeness or accuracy. Okay, we've gotten that out of the way. So that really brings me into, just kind of discussing why we do these reviews. First, I'd like to start and say that I'm extremely thankful for, the world that we live in today. And, you have to look at everything with the pros and cons, but this internet thing has really helped us, add value to prospective clients in terms of being able to reach people looking for this type of information. So I'm very thankful that we have these platforms to be able to share and disseminate this information to you. And ultimately, the reason why we do these product reviews is to really bring more transparency to the overall annuity marketplace. This is a very antiquated industry. It wasn't that long ago where all of the applications that we submitted were still pen and paper and faxed into the companies. And now, just within the last handful of years, financial technology and the softwares and tools have really stepped up and allowed us to provide more education using those avenues to be able to disseminate the right information to prospective clients and people finding out about indexed annuities looking for more information. Now we have the ability to go in and compare apples to apples, side by side, all of the independent annuities on the marketplace to help bring more transparency, more information, and ultimately give you, the consumer, a way to make an educated and informed decision. Traditionally, annuities have always been sold. Okay. But with that, we're trying at Annuity Association, our mission is to change that dynamic and in turn make it to where more people are buying them because they're educated and they've done their due diligence to compare all of the annuities available to them to help them identify with the one that's going to meet their needs and obtain their objectives the most. So if you, at any point in time you have a question or you're interested in speaking with me directly, or you'd like to receive a comparison report on all of the annuities on the marketplace, whether it be for guaranteed income or safe accumulation or fixed rates, whatever the case may be, you can visit our website at annuityassociation.com. Right there on the main page, click the green button and request your free report. And if you'd like to speak with me, there will be a question on that form that asks if you'd like to be contacted by an advisor. Just select yes, and I will get back to you in a very timely fashion to see how I can help point you in the right direction. So without further ado, let's go ahead and dive into the product brochure on the AIG Power Index 7 Fixed Indexed Annuity. So let me share my screen again. There we go. Okay. All right, let's dive on in. So let me get this out of the way. All right, AIG, we all know the name. We've all heard of them. Let's go ahead and discuss the brochure. So indexed annuities are not are not a direct investment in the stock market. They are a long-term insurance products with guarantees backed by the claims paying ability of the issuing insurance companies. If you're looking for a tax advantage solution that offers the principal and safety and guarantees of a traditional fixed annuity, but with the potential for higher interest earnings linked to a stock price index, then look no further. If you want the comfort of knowing you won't lose your principal due to market downturns and you'll receive guaranteed income for life, the Power Index 7 Fixed Indexed Annuity is something you should consider taking a look at. The Power Index 7 annuity is a single premium index-linked deferred fixed annuity and may be the solution that can help you build income for the future. It offers you the potential to earn better returns than traditional fixed annuities when stock values are increasing, without the risk that your principal will decline in down markets. Any interest earned on your Power Index 7 annuity each contract year is locked in, which protects any interest earned from future index losses. By linking the interest earned to a portion of the return of the stock price index, subject to an interest rate cap, you have the potential to outpace inflation. And you can enjoy the benefits of a traditional fixed annuity and choose a payout option that guarantees income for life. All guarantees provided in every annuity are subject to the claims paying ability of the United States Life Insurance Company in the city of New York or by AIG, depending on the state that you find yourself in. All right, so when the financial markets zig and the economy zags, it helps to have some protection from financial risks. An index-linked deferred fixed annuity may be a good fit for certain customers who are looking to help satisfy long-term financial goals, want to protect their principal, and have the potential for better returns than many other financial instruments and traditional fixed annuities, want an income they will not outlive, and are looking for an annuity or other insurance product to help diversify their retirement assets. So if you find yourself in the market today, in today's environment, it's no news that we're in a very historically low interest rate environment. So with that being said, the traditional safe money instruments such as bank CDs, bonds, money market accounts, etc., they're no longer providing the yield that most retirees are needing to be able to support their income goals in retirement. So if you're not finding the interest yield that you're looking for in the traditional vehicles, a fixed indexed annuity is a great alternative to consider because contractually in the annuity, you're getting 100% principal protection, meaning that regardless of how the markets perform, if they perform negatively, your principal and any interest that's locked in is not impacted. The worst possible case scenario on any given year would be a credit of zero. There will never be a negative amount incurred in the annuity. In addition, they provide more upside potential than those traditional safe money instruments because they use an index linked strategy to credit your account interest over that period of time that you're in the annuity. So bear with me. I forgot to silence my phone. Let me turn this thing off. I apologize for that. All right. When you purchase an index-linked deferred fixed annuity, you are buying an insurance product, not shares of any stock or equity investment. It's a contract between you and an insurance company. Keep in mind that index-linked deferred fixed annuities do not guarantee that index-linked interest will be credited in any contract year. The performance of the index will dictate whether interest is credited. However, if the index is flat or negative in any given year, your annuity will still earn interest at the guaranteed fixed interest rate specified in your contract. Principal may be reduced due to the withdrawals or any associated charges. So one of the nice things about this annuity and compared to the other indexed annuities out there is this one contractually offers a guaranteed floor. So it has a fixed interest rate that's guaranteed in the contract. So regardless if the performance of the underlying index is not performing well or it's even negative for any given contract year, you still have a guaranteed interest rate that your monies are growing by, which is not tied to any indexes. It's a fixed rate specified in the contract. So that's one of the unique differentiators in this particular product from AIG, the Power Index 7. Most other indexed annuities don't offer a guaranteed floor. So in the event that the index does not perform, you'd be credited as zero. All right, so let's look at the Power Index 7 annuity highlights. Guaranteed interest crediting. You can take comfort in knowing the value of your annuity will never be less than 100% of your single premium accumulated at the minimum guaranteed annual fixed interest rate, which is set on the date your contract is issued. The annuity also offers an optional return of premium guarantee rider. Tax deferred accumulation. Your savings may accumulate at a faster rate than they would in a comparable taxable account. So one of the many benefits is the tax deferral in an annuity. You don't have to pay taxes on any gains at all unless a distribution is taken. So each year that you defer and don't take any withdrawals, you're benefiting from that tax deferral. No initial sales charges or annual administrative fees. Your money can start to work for you right away. So one of the biggest misconceptions found with the word annuity, I hear it all day long from prospective clients, is, I've always heard annuities were bad and that they're highly feed, etc. Well, you have to understand there's 5 different types of annuities out there on the marketplace. Not all of them are created equal. Each one of those 5 is designed to serve in a different intended purpose. And fixed indexed annuities are oftentimes zero feed products unless you add a rider, which is a word for an option or feature to the contract. Oftentimes those riders do have a fee associated with them to elect to have that benefit, generally between 1% and 2% at most. The type of annuity that gives that word annuity a negative perception is the variable annuity, and those are traditionally a highly feed product, anywhere from 2 to 5% in fees when you add up all of the mortality and expense fees, the administrative fees, the mutual fund fees, the rider fees. Once you've added those different fees up, they can average anywhere from 2 to 5%, and that is the type of annuity that gives this annuity marketplace a negative outlook. But in general, fixed indexed annuities are low feed products, sometimes even zero. So they're actually putting that in writing so that you can see that as a consumer, which is very, very nice. You have easy access to your money. Take advantage of the penalty-free withdrawal options if you need to access your funds. Keep in mind that withdrawals of taxable assets are taxed as ordinary income, and if taken prior to age 59 and a half, may be subject to an additional 10% federal early withdrawal penalty. So if you have a 401k or IRA that you're looking to roll over to this annuity, you can do that. Just keep in mind that the same tax codes and federal laws apply to those qualified dollars, even inside the annuity. Multiple retirement income payout options. You can choose how you'd like to receive the payout. And you have a guaranteed death benefit, which can provide income payments to your beneficiary. Principal protection from market downturns. This is one of the biggest contractual guarantees, and why people buy indexed annuities is because of that contractual guarantee of principal protection against market downturns. It may ease your mind to know that if you decide to cancel your annuity at any time, you will receive at least your annuity value minus any withdrawal and related withdrawal charges. If you want more protection, you can add the optional return of premium guarantee rider when you purchase the annuity. The optional return of premium guarantee rider, if you want to add this optional rider to your contract, you must select it at the time of application. It allows you to return the annuity at any time for an amount equal to the single premium paid, less any prior withdrawals, or the annuity value less any early withdrawal charges, whichever value is greater. Just remember, adding this feature may result in a slightly lower interest rate cap than a contract without the feature would receive. If you choose not to add the return of premium guarantee and need to cancel your contract before the end of the withdrawal charge period, then you may receive less than your premium paid due to the withdrawal charges. So AIG is basically adding this optional feature that, in the event, a few years into the contract, you just are not happy with the performance, or maybe you have a better opportunity, or whatever the case may be, you want to exit the contract. If you have this rider added to it, you will at least get the amount of investment you initially paid into it with no penalties incurred whatsoever. Guaranteed interest crediting. The United States Life Insurance Company in the city of New York guarantees that your annuity will never be less than 100% of your single premium payment accumulated at the fixed interest rate set on the day your contract is issued, less any prior withdrawals and any related early withdrawal charges. So you have a guaranteed interest credit that's growing on the annuity, regardless of how the underlying index performs. The tax deferral advantage is a key feature that helps your savings accumulate at a faster rate than they would in a comparable taxable account. That's because you won't have to pay current taxes on any interest or earnings until you withdraw it. While your money remains in the annuity, both your principal and earnings have the potential to earn interest. Money that otherwise would have gone toward federal income taxes stays in your annuity, earning potential interest. Earnings are not taxed until withdrawn. And then they offer an estate planning advantage through the death benefit. The Power Index 7 annuity offers a guaranteed death benefit that allows you to designate and or change your beneficiaries at no cost. Generally, fixed annuity proceeds avoid the probate process, and that's a benefit because probate can become costly for your heirs and result in lengthy delays. It also becomes public record. With the Power Index 7 annuity, if an income plan has not begun, the annuity value will be paid to the beneficiary upon the death of the owner, without delays and privacy issues. Withdrawal charges are not assessed on death. Any interest credited will include interest linked to the stock price index only up to the date of death, or the fixed interest rate if higher. Thereafter, a declared rate of interest will be credited daily to the death benefit until the benefit is paid. And although the cost of probate may be avoided, there is no step up in cost basis afforded an annuity beneficiary, and the amount inherited is subject to tax at the beneficiary's income tax rate. Okay, so let's talk about how you can earn interest based on the positive performance of a stock price index using an annual reset approach. What is the stock price index interest that you can be linked to? With the Power Index 7 annuity, your interest is linked to a portion of the return on the S&P 500 index without dividends. The index serves as a bellwether for the U.S. stock market. Widely regarded as the best single gauge of the U.S. equities market, this world-renowned index includes 500 leading companies and leading industries of the U.S. economy. Since its inception in 1957, the S&P 500 has generally outpaced inflation. Past performance does not guarantee future results. No interest is earned in flat or down markets. Index annuities are not a direct investment in the stock market. They are long-term insurance products with guarantees backed by the claims paying ability of the issuing insurance company. So how is interest applied to the contract? Each year, you're guaranteed to earn interest equal to the higher of the percentage change in the index, subject to the cap or the fixed interest rate shown in your contract. Here's how it works. First, on each contract anniversary, we will compare the current index value to the index value on the previous anniversary. If the index has increased over the previous contract anniversary, the value of the index interest credit is equal to 100% of the gain up to the amount of the interest rate cap. So this particular annuity gives you 100% participation in the S&P 500 index. So whatever growth has been accrued over that 1 year point to point, but there is a cap, meaning it's a ceiling on how much of that index performance you can earn. So we'll be looking at the cap rate on this particular product here momentarily to determine how it would perform when looking back over the last 10 and 15-year periods. The amount of the index interest credit is then compared to the fixed interest rate declared at the time your contract is issued. The company will credit your contract with interest equal to the higher of these two values, either the percentage change in the index number subject to the applicable interest rate cap or the fixed interest rate as described above. This means that even if the index is flat or has declined from the previous contract anniversary, your annuity will not lose value and will always earn interest each year at least equal to the fixed rate specified in your contract. So what this is saying is that essentially you'll never have a year where you have a 0% interest credit. What they're going to do is they're going to look at the performance of that S&P 500 index, apply the cap, and if that performance is lower than what the stated fixed interest rate is, which is guaranteed, they're going to credit your contract with that guaranteed, the higher of the two, whether that be the fixed interest rate or the index interest rate. So that's very, very unique. That allows us to have some type of growth every single year, regardless of what happens in the market. Keep in mind, the annuity has an interest rate cap that places a maximum limit on the amount of interest. With that, no additional interest is credited if the change in the index exceeds the interest rate cap. The interest rate cap is guaranteed for the first year in the term, and on each contract anniversary, a new interest rate cap will be declared, which will apply during the next contract year. The United States Life Insurance Company, formerly AIG, guarantees the interest rate cap will never be set lower than the minimum cap rates stated in the contract. Any interest earned is locked in annually, and the index value is reset at the end of each year. That means future decreases in the index will not affect the interest you have already earned or reduce the value of your contract. So regardless of how the index performs during all the years of your Power Index 7 annuity, you are guaranteed to always earn at least the annual fixed interest rate specified in your contract each year. So let's look at some examples. Let's take a look at the 3 hypothetical examples here coming up on page 9 to get an idea of how interest is applied to a contract when the index value is up and down. These examples are based on the assumptions noted and are intended for illustrative purposes only, and the examples are not guaranteed and should not be considered a representation of past or future performance. So they're going to give us some hypothetical assumptions showing us a $100,000 single premium payment made to the annuity. It's on a 7-year withdrawal charge schedule. Interest rate cap is set to 4%. That's on the S&P 500 index. Remember, the interest rate cap is reset annually and may be higher or lower than illustrated here. It's going to show no withdrawals were taken, and the fixed interest rate was set to 1%. So here's the first example. Contract year 1, the index value is up. So we see the $100,000 single premium payment, and the account value is $100,000 at the beginning of the year. And the index value percentage change was 6%. So that means the S&P 500 went up, in this case, 6%. It does have that interest rate cap that applies of 4%, and that fixed interest rate was set to 1%. So the amount of interest applied at the end of the year was $4,000, giving the final annuity value at the end of the year a total of $104,000. So what they did is the S&P 500 grew 6%, they applied that 4% cap, which means that's how much of the 6% the contract holder would be credited. And the 1% fixed rate did not come into play since the 4% growth on the index was higher. And so they gave the $4,000 as a credit to the $100,000 principal. The change in the index, I'm not going to read that. It says exactly what I just covered, so we'll skip that. And then here's example 2, contract year 2, the index value is down. So we started the beginning of the year with 104,000. The index had a negative performance of negative 5%, and the fixed rate was 1%. Well, you'll see that the 1% fixed rate applied in this case because the index strategy performed negatively. So you'll see $1,000 and $1,040 credited to the $104,000 beginning value for that contract year 2, making the total account value at the end of contract year 2 $105,040. The change in the index from the previous year was down, so that's why the 1% interest credit from the fixed account applied instead. So contract year 3, the index value is up again. We started the beginning of the year, contract year 3, with $105,040, and the index went up 1.75%. Well, because that is up more than the fixed rate offered in the contract at 1%, they apply the 1.75% to that $105,040 value, crediting $1,838 to the end of the year balance, making the end of the year value now $106,878. So pretty simple to understand. If the index doesn't perform positively, or it's not higher than 1% in that example, then the fixed rate would apply to the credit of 1% to the overall value. So it shows how, regardless of what the index does, you're always going to have some sort of credit applied each year, which is very nice. So you do have easy access to your money. Although the Power Index 7 annuity is designed to help meet your retirement and other long-term financial goals, you still have access to your money if you need it. You can take advantage of the penalty-free early withdrawal privilege. Early withdrawal charges are waived so long as you do not go over the permitted free withdrawal amount. We'll be talking about that amount momentarily. Early withdrawal charges are waived. Multiple early withdrawal charge waivers are available and can be used under certain situations. How much can you withdraw penalty-free? After you've had the contract for 1 year, you may take one random withdrawal each year penalty-free up to 10% of the annuity value as of the previous anniversary. So if you invested $100,000, after the first year it grew to $105,000, starting contract year 2, you could withdraw 10% or $10,500 of that total value without incurring any withdrawal charges whatsoever. If you make a withdrawal on the date other than the contract anniversary, the amount withdrawn will not be credited with interest resulting from the percentage change in the index. Instead, any amounts withdrawn will be credited with daily interest equal to the fixed interest rate from the date of the last contract anniversary to the date of the withdrawal. Withdrawals are taxable amounts. Withdrawals of taxable amounts are subject to income tax, and if taken prior to age 59 and a half, a 10% federal early withdrawal penalty may apply. Early withdrawals that exceed the permitted free amount, of course, you'll always have that option to withdraw more than the free withdrawal amount at any time. Just bear in mind any withdrawals during the 7-year term that exceeds the free withdrawal amount is subject to a contractual early withdrawal charge, which can reduce the value of your annuity and guaranteed income benefits. The minimum random withdrawal amount is $1,000, and your remaining annuity value must be at least $2,000. And your withdrawal plus any early withdrawal charges will be deducted from your annuity or value. And remember, the IRS rules apply if you're taking the withdrawals prior to 59 and a half on any qualified tax-deferred dollars. So the early withdrawal charge schedule is listed here in the contract. Years 1 through 7, there will be an early withdrawal charge assessed for any withdrawals above and beyond that 10% free withdrawal provision. 9% penalty in year 1, 8% in year 2, 7% year 3, 6% year 4, 5% year 5, 4% year 6, and 3% year 7. After the end of year 7, 0 withdrawal charges apply to any withdrawals after that period of time. Now, in the event that you are rolling over qualified dollars and you have to meet what's called required minimum distributions if you turn 70 and a half or age 72, depending on the year you were born, you can still take out those required minimum distributions and not be assessed a withdrawal charge if those RMDs happen to be above that 10% free withdrawal provision. So keep that in mind, that you won't be charged for those RMDs. Now, there are additional early withdrawal charge waivers. Unexpected changes in your life can throw your original plan off track. You can withdraw the funds without an early withdrawal penalty if you need to stay in a nursing home. After the second contract year, withdrawal charges will be waived if the contract owner is confined to a qualifying institution or extended care facility for 90 consecutive days or longer, or you're unable to perform certain activities after the first contract year. Withdrawal charges will be waived if the contract owner cannot perform 2 or more of the 6 defined activities of daily living. Things such as bathing, continence, dressing, eating, toileting, and transferring for at least 90 consecutive days. Written documentation from a licensed healthcare practitioner is required. Discover that you have a terminal illness. So in that event, withdrawal charges will be waived on one full or partial withdrawal if the contract owner is diagnosed with a terminal illness that will result in death within 1 year. This requires written certification by a qualified physician. So that addresses, the misconception that you're tying up your money in an annuity, and if you have an emergency, you can't access those funds. That is entirely false. And anybody telling you that does not know annuities, or they're just frankly lying to you because they don't want you to invest in an annuity. They want you to keep their money with them. So these annuity products address the risks of retirement, one of those being liquidity for emergency and health-related events. As you can see here in writing, you're covered if any of those 3 events occur. Income choices. You decide how much you receive and for what time period. So you could have a lot of years ahead of you in retirement. The Power Index 7 annuity offers an income solution that can help see you through them. Anytime after 12 months from the contract date, you can convert your contract to an income stream and begin receiving payments. You decide when you will begin to receive annuity income payments and which payment option best suits you. Keep in mind, withdrawals taken prior to age 59 and a half are still subject to that additional 10% tax penalty. During the payout phase, the time when you begin income, the amount of each income payment depends on the payout option selected. Once payments begin, the payout option cannot be changed. You can choose an option that provides guaranteed lifetime payments. So what they're telling us here is that, if you decide that you'd like to receive income, you'll have a couple different flexible options in regards to how long you receive income for. You can elect to have what's called a period certain, which would maybe a certain period of time, anywhere from, 5 years, 10 years, 15 years, or 20 years. And once that period is up, then the payments will cease. And the annuity will be, done for that matter. You'll have exhausted all of the funds in the account to meet those income payout options. Or you can elect to have lifetime income, which will cover your income for life. You can structure that single or joint to cover you and a spouse. And in the event you elect for the lifetime income option, you're using a form of what's called annuitization. So you're giving up in exchange for the principal and any interest earned in the account. In exchange for that control over that money, they're going to guarantee you a lifetime income stream that you'll never outlive. And you can structure that for your life and your spouse, or just your life, depending on what your needs are. Now, keep in mind, only about 3% of indexed annuities ever go this annuity, what's called annuitization route. Most people looking for guaranteed lifetime income will buy an indexed annuity that has a lifetime income rider on it. And what the lifetime income rider does is it gives you the ability to still maintain control over the assets in the contract value, while also still receiving that guarantee on the lifetime income. So it gives you control over the values of the annuity to, still be able to withdraw them if you need to. Just keep in mind that if you do have an income rider and you have income activated, if you do withdraw from the contract value, it is going to readjust your guaranteed lifetime income amount, since the guaranteed lifetime income amount is based on how much is in the contract value at that time. So in this particular annuity, this is more of an accumulation focused annuity. It does not have a lifetime income rider option. So if you do elect to take income, you're going to have to annuitize it in this annuity. Okay, let's keep on going. Ownership. The Power Index 7 annuity is available to individuals aged 18 to 75. However, if your index annuity is in a retirement plan or in an IRA, you must be no older than age 72 at contract issue. The minimum amount is the single premium payment needed to start a Power Index 7 annuity is $10,000 for non-qualified and tax-qualified annuities. The maximum amount without prior company approval is $1 million. So in determining if an index-linked fixed indexed annuity is right product for you, speak frankly with your licensed agent or financial representative about your financial situation and your retirement goals. As with all financial products, there are certain risks to consider. An open discussion will help you and your licensed insurance representative determine if the Power Index 7 annuity may be an attractive solution for your long-term goal. So if you're interested in comparing this annuity to all of the other various indexed annuities on the market to determine which product is going to help you meet your goals and objectives, and you're looking for a way to work with a professional that will truly compare apples to apples, side by side, all of the products, and take you through a very educational process to help you make an informed decision, you can elect to work with me by going to annuityassociation.com. Right on the main page, click the green button to request your free report, and we'll get that out to you in a timely fashion. On that form that'll ask a question if you'd like to be contacted, just select yes, and I'll get back to you in a timely fashion to see how I can help. So we appreciate the opportunity to work with you. All right, so let's go ahead and get into our analysis here to see how the Power Index 7, from a performance perspective, performs when looking back over the last 10, 15, and 20-year periods. Now, this is a hypothetical backtesting process, so prior performance is not always a good indicator for future performance. None of us know what the future holds with the markets, but this is a good way to really see how the current offerings in the contract of the annuity would fare based on the performance of the S&P 500 when looking back over these 3 periods of time. So right here on our screen, if you haven't enlarged it yet, please do so. It'll make it easier for you to view. But we'll see the 1-year S&P 500 point-to-point cap strategy in the Power Index 7 comes in at number 1 for this annuity. And the cap rate set in the contract is currently 4%. Before we do that, let's look at the fixed account. The fixed account is currently set to a guaranteed rate of 1%. So that's the least amount that you would earn in any contract year in the event the S&P 500 does not perform based on the current structures of the contract. So when we look at to the right here, you'll see those 10, 15, and 20-year columns. And when you're looking at this, the bold black numbers, the one that I have highlighted here on the screen, what that is showing us is during the last 10 years, from December 31st of 2010 to December 31st of 2020, the average annualized credited interest rate to the contract would have been 2.78%. Just below that, you'll see a green number and a red number. The green number is showing us over the last 20 years. The software is going through every single month and every single day and figuring out what the best 10-year period would have been when looking back over the last 20-year periods. And in this case, from March 4th of 2009 to March 4th of 2019, the best 10-year period would have had an annualized credited interest rate on average of 3.37%. On the other side of the fence, on the red numbers, also doing the same thing, but looking at the worst 10-year periods when looking back over the last 20 years. And in this particular case, it's from January 29th of 2001 to January 29th of 2011. The performance was 2.34% average annualized credited interest. Now, when you're looking at these numbers, they're not spectacular. They're not, anything to really write home about, but you're still getting more than you could possibly find in today's safe money instruments, such as bank CDs, money markets, or 10-year treasury bills for that matter. So you're getting about 3 times more than the highest of any of those 3 safe money instruments at this present time. Now, let's look at the 15-year period, 2.89%, and the 20-year period, 2.71%. So that gives us an idea, what could this really do, or how could this really perform over, long periods of time? You're just under 3%. Now, as an independent advisor on annuities, we have access to every independent annuity on the marketplace today. If somebody came to me directly and they were looking at this particular product and their needs were safe accumulation of assets with no market risk, and they happen to like the S&P 500 index strategy, I most likely would not recommend or advise them on this particular product unless, for whatever reason, they were just dead set on AIG, or what's now known as United States Life Insurance Company. If maybe they just had a thing for that company, they either have done business with them in the past, they like the track record that they have, or they're just comfortable with the brand, then maybe I would say, hey, let's take a look at this. But to show you kind of what we do and the value we add to prospective clients, if you came to me and said, hey, Jeremiah, I really like the S&P 500, and I'm just looking for the right annuity that's going to give me the highest upside growth with no downside risk. Well, if we went in and just chose the S&P 500 of all of the various index strategies out there, then we would just go ahead and sort for that index, and we'll remove the filter for the Power Index 7, and you'll see that there's a significant amount of other annuities out there. I forgot to select all of the S&P 500 indexes. Bear with me 1 second. There we go. So you'll see here when the screen populates, there's a significant amount of other products available on the independent annuity marketplace that offer significantly higher growth opportunities when back testing them over the same periods of time. That AIG annuity went from 2.78 at the highest for the 10 years, and you'll see the other options available on the market are as high as almost 8%. Actually, there is one above 8%. So it comes down to working with a professional that has the ability to work within all annuity products available on the market, not just captive to one company or a couple different products that they have that they can only offer. So if you're looking at a bank, if you're looking at an advisor that's only showing you this and not giving you a few different options that are completely different companies and product offerings, then if you're looking for an individual that can help you do just that and shop the independent annuity marketplace to help you find truly the best one that's going to help meet your goals and objectives of retirement, work with us at annuityassociation.com by starting our relationship. Click the green button to request your free comparison report, and I'd be more than happy to give you a call and see how we can get together and help point you in the right direction. So I hope that you've gotten some value from this review today, and that that you understand that annuities are not created equal. There's always going to be the good, the bad, and the ugly out there in any type of product in any industry. And our mission is to help bring transparency to help consumers make informed and educated decisions. So I hope you gotten some value out of this annuity review. And if you have, please like and share and subscribe to our YouTube channel if you haven't done so already. That'll help these videos get ranked higher so that it can help individuals just like you looking for the same information. So without going on any more rants, I just want to say thank you so much for your time. I'm looking forward to the opportunity to work with you. And if you have any questions, you can post a comment right here on the chat. Otherwise, thank you so much for tuning in. Hope you have a great weekend, great day, rest of your day, and hope that everybody is happy, healthy, and has a great weekend. So thanks so much. Take care of one another. Jeremiah Conjure from Annuity Association signing off.